The real question is, okay, how do we recognize revenue? Because it cannot be just like, okay, I received cash, this is revenue. Sometimes we don't receive cash, and sometimes the cash that we receive is not revenue. So the short idea is that revenue recognition is all about performance obligation. Against every payment or promise of payment, there is something that the company has agreed or committed to do. And that something is the performance obligation. So if the performance is simple, I give you an example. Let's say that the company sells pen, right? So you bought the pen, you have the pen in your hand, and you gave cash or you paid by credit card. Then the revenue is recognized immediately because the company completed the performance. Like the obligation was to give you the pen, it did, it's done. But sometimes it's a bit more complicated than that. For example, a construction contract or a long-term service that happens over time. In this case, even if it was paid initially, it doesn't matter. Like you cannot recognize the full contract value on day one. Instead, you recognize it over time as you satisfy the obligation. And this is, if you want, the idea of percentage of completion. For example, you assess that you did 30% of the work, so you recognize 30% of the total revenue, not of the cost, of the total revenue, assuming certain criteria are met. Now comes the question, when we record, where do we record this amount? Is it on the balance sheet? Is it only on the income statement? Like, how does it work? Why is there receivable, contract assets, contract liability? And the general idea is that you have to think about whether it's going to be conditional or unconditional. If you have performed, or the company performed the obligation and it was billed, then the only thing that remains is to wait until the payment by the customer is made. And in this case, this is a receivable. It's unconditional receivable. And of course, the client can fail paying you, but it is recorded as a receivable. If your right to payment is still conditional on something other than just the passage of time, then it leads to a contract asset or liability depending on whether you billed more or less than what you performed. And that goes also, receivable is also in the balance sheet, but it's a different entry in the balance sheet.